Hi there, I'm Dermot Dermot and I have Silvio Peruzzo, Senior European Economist from Nomura in London on the line for this update on the Eurozone. Hi Silvio. So the market Eurozone PMI Composite Output Index rose above the 50.0 no change level in July for the first time since January 2012. So what do you think about this rise?
I think it's an important sign that confirms the early indications that the business cycle in the Eurozone may be stabilizing at a very low level. So it points to some form of summer revival in the region, if you want. However, there are a number of indications which, from a more fundamental perspective, I think are still consistent with a multi-year stagnation for the region, on the assumption that the improvement that we see in the data so far is predominantly driven by foreign demand rather than a more genuine improvement of domestic demand in the Eurozone. As far as the market is concerned, I don't think the market is just reacting to this specific data point, but generally is increasingly confident with the idea that the business cycle is stabilizing, the economy is stabilizing, which is a message we've been getting from other indicators over the course of the last 2 weeks.
And the European Commission yesterday said its preliminary measure of consumer confidence in the Eurozone increased to minus 17.4 in July from minus 18.8 in June. And this is the highest level since August 2011. But despite this, consumers remain pessimistic and a pickup in consumer spending is desperately needed to get the Eurozone back on track. So what are your thoughts on this?
I think it's the indication of the consumer confidence goes pretty much in line with what we've just said and points in the direction of stabilizations, but at levels which are extremely low. And the implication of this is that we will get better sentiment, but that does not necessarily translate into spending that will add up to GDP growth in a meaningful way. So our scenario for next year, for the remainder of this year, is a scenario where the consumer would not be the driver of any meaningful recovery. So, and then that's due to the fact that the labor market conditions continue to remain very weak in a large part of the Eurozone. And against this backdrop, it's very difficult to see how spending from consumers could increase very, very significantly. On top of that, also the policy level, there is a very clear attempt from European policymakers to decrease the degree to which wages across the board are going up. We see many of the policies which have been implemented in some of the Eurozone countries being consistent with a process of wage moderation. They're coupled with the fact that we're still shedding jobs in a significant proportion of the Eurozone, adds up to a picture which is very cautious on the domestic demand side and the income generation side.
And at the G20 meeting at the weekend, we witnessed a change in attitude in regard to the austerity versus growth debate. G20 leaders pledged to put growth before austerity. So what do you think about this change? And in your opinion, what were the most important points made in relation to the Eurozone?
Yeah, I think it's a pretty important recognition, but overall this debate, I think it needs to be contextualized to what are the most immediate priorities that policymakers need to sort out. When the old fiscal austerity debate took off, we were in the midst of a situation where stability of public finances was at risk. There was a very, I would say, pressing need to convince market that the situation was not going to degenerate and would have potentially brought about an increase in what was the perceived risk of default for some countries. So back then, I think austerity was probably the easiest way to address concerns of some of the sovereign default. Now, moving forward, once the number of things have changed. There are a number of backstop, a number of measures. Perception on the market on the probability of any default event has changed dramatically. Now it's certainly the time to privilege growth.
And finally, Silvio, what important events in the Eurozone will you be watching out for this week and over the coming weeks that you think will have an impact on the markets?
I think there are a couple of important political events in the back seat which can become more important. One is related to the stability of the Italian government, which is threatened by a sentence that the National Supreme Court has to issue about one of the major coalition parties' leader, and that is due by the end of the month. That could put in some destabilizing forces in the coalition. It may have implication for the market at the Eurozone level as a whole. Being Italy a big country, that can have contagion effects potentially. And most importantly, I think also the focus is going to be on the ECB, which has introduced a forward guidance language in the previous policy meeting in this month of July. And I think the market will be pretty focused on next week's meeting to gauge the extent of any possible clarification or further policy step. Although our expectation is that nothing will happen, but that's certainly something that is in the radar screen of many investors.
Thank you very much, Silvio. Well, tomorrow I will be looking at the New Zealand rate decision, so see you then.